find it baffling that health insurance costs are increasing so much in the United States and seemingly not elsewhere in the world? I find it baffling. Would you also be surprised to learn that the actual cost of healthcare is not really increasing that much year over year? Only insurance costs are increasing year over year. By the time we finish up this video, you'll understand why and how that's happening and why it doesn't happen elsewhere. We help employers add control and predictability back into their healthcare spend. And the happy side effect of that is less out of pocket for your employees and access to higher quality care. Hi, my name is Allison DePauli, and I started Altiqe Consulting to help employers get out of the healthcare spend craziness and back to running their businesses. Our clients don't hear, well, the best we could do is a less bad renewal. They hear instead, your employee had access to the best quality care and you paid less for it. In the United States, for the most part, we have abdicated responsibility for what healthcare services actually cost. I do this every day, and it even happens to me. I go to the doctor, I pay my 20 bucks, and I think that that's all it costs. It doesn't. Doctor visits don't cost $20. They cost $85 or $120 or $250, or if you're a very if you're a person that has a lot of complex medical needs, that visit may not cost $20, that visit may cost over $500, but you never see that, right? So, how many of you have thought, well, insurance will cover that and move on, and you don't really care what it costs? Ultimately, you are the insurance company, and let me show you what I mean by that. In what other area of your business or your life do you not know what something costs before you pay for it? With our current health insurance system, you, both as the employer and the employee, have no idea what something will cost until weeks or months after that service is performed. Right? How many times have you been told, oh, well, your responsibility is $2,500 or $800 or $5,000 if you're in the hospital and you're having a complex procedure? You have some idea that that doesn't cost $2,500 or $800 or $5,000, but you really don't know how much it costs. Your insurance company doesn't know how much it costs. Your employer doesn't know how much it costs. You just know it's going to cost more than what you just paid for it. Ultimately, you are the insurance company, so it's in your interest to know what that costs, right? So let's talk a little bit about how we got here. One of the consequences of the Affordable Care Act, and we're going to leave the politics out, we're just going to talk about the realities of what has happened. An insurance company must spend 80 or 85 cents of every dollar on claims. Now, in theory, this really makes sense, right? You want to control your administrative cost and you want to spend the bulk of the dollars on claims. However, there's a little challenge there. What that ultimately means to an insurance company, which is a publicly traded company, is that the only way that they can grow their revenue and their profit is to let claims costs increase at whatever rate they're going to increase. The higher the claims cost, the higher their 15 or 20% of that dollar is. Most large insurance companies are for-profit entities, and they owe that growth to their shareholders. Okay, I mean, every business is in business to make money. I'm in business to make money, you're in business to make money. If you're a consumer, you go to work to collect a paycheck to make money to pay your bills. So this is really a reasonable thing. However, the lack of transparency in this industry is very unusual. You don't buy office supplies and find out what they cost 2 months later. You buy office supplies when you know what they cost. Healthcare, while a little more complex, should be the same way. Okay? Next, employers have no idea what their claims actually are. Even though they're getting something that says, oh, we paid X, really, why, how, what was the actual cost of the service, how many layers were added in between to get that final cost. And you have a really hard time finding what your claims costs are. How many of you, leave me a note below, how many of you have tried to get your claims costs from your provider? How many of you have experienced the fight that is, or when you get it, the data is in such a mess that you can't really make heads or tails of it? And if you can finally sort that and say, okay, this service costs this much, how do you know, one, it was a reasonable price, and two, it was from a quality provider? Okay, so I find this especially concerning, particularly for manufacturers and people who who have businesses that run on a slim margin. I know a gentleman who negotiates to the 10th of a cent on paper plates. His company makes paper plates. They have no idea what their health insurance costs. Okay, this is the only industry where that happens, right? So let me know what your experience is below. Okay, so let's talk about why health insurance costs increase so much year over year. So if you're fully insured, and I suspect most of you here are, then you know that claims, you pay your premium to your provider, and you get a bill and you pay it, and then they pay the claims, and you don't really know what happens there. Claims are divided into buckets. There's a claims bucket, there's a reinsurance bucket, and yes, an insurance company has reinsurance. They do not assume 100% of the risk for your group or for you as an individual. They absorb so much of that, and then they pass that off to something called a reinsurer or a stop loss carrier. Even if you're fully insured, you as the policyholder just don't see that, okay? It's really important for you to know that. So you've got your claims bucket, you've got your reinsurance bucket, you've got an admin bucket. It does cost something to manage a plan, so administration of the plan rules, processing of claims, making sure that there's a customer service line that gets answered. That's all your administrative cost. And then there's a pooling charge, and the pooling charge is basically profit, probably 6 or 8%. Okay? Now, most for-profit entities have a revenue goal each year, right? When you run your business, you know that next year you want your sales to be $1 million or 10 million or 50 or $100 million. That's your revenue target, okay? Insurance companies are no different. They have a revenue target also. So they look at their revenue target, they look at what their claims are, they look at what their admin costs are, they add their pooling charge, and that's how they come up with the premium for your group. Okay, now in theory, there's no problem with that, except if your claims are radically higher or radically lower. Does that make sense to everybody? So let's say that the insurance company is budgeting that your claims are going to be $500,000. Okay, and if you are a 100 life employer, you've got 100 people and 100 employees on your plan, 125 employees on your plan, in Texas, that would be fairly typical. Well, $500,000 is a lot of money, right? I mean, it's a lot of money for me. I'm assuming it's a lot of money for you. They're budgeting that. If you spend less than $500,000, which happens quite often, let's say you spend $350,000 or $400,000, you don't get that $150,000 back. That stays with the insurance company. And if you spend more than $500,000, they have reinsurance for that. It's not coming out of their pocket anyway. It's coming out of the pocket of the stop loss. Now, yes, the reinsurance might increase a little bit next year, probably just a little bit, because no two claim years are ever the same, but they're protected anyway. So they're going in knowing that they're going to make X, and they're banking on your claims not being what they're anticipating. So it is really important that you know what your claims costs are so you can negotiate a little bit better, which brings us back to our first point. The reason that there is such a difference in healthcare costs and health insurance is that insurance companies are estimating what your claims are, and they are not refunding any of the premium back to you if they're wrong and they have overestimated. Does that make sense to everybody? Let me know if it does or not. And if this is concerning for you and you want to know how pooling charges and trend, because that's basically medical trend, are impacting you, click the link below and let's talk. Have a great day.